The market meltdown for the third straight day. Global markets are sinking.
Markets across Asia, Europe, and Australia plunging.
At one point this morning, the Dow sinking almost 1,600 points.
The markets lost more than $6.5 trillion in value.
This is an economic Armageddon.
Buckle up, because we're living in the world where the stock market drops and you'd think, like any sane, rational human being with a basic understanding of economics 101, hey, maybe the mortgage rates would drop too, right? Wrong, because we're living in a reality where up is down and down is sideways and who knows what goes where. And mortgage rates are apparently tied to the mood swings of a caffeinated squirrel. So the stock market tanks. Why? Could be tariffs, could be inflation, could be oil prices, or maybe Jerome Powell just ate some bad sushi and now he's taking it out on everyone. Typically when this happens, when the market goes into full meltdown mode, investors say, let's get out of the risky stuff and run to the safety of bonds. And when people flood into bonds, bond yields go down. And when yields go down, mortgage rates go down. Right? Because that's how it's supposed to work. That's economics in a nutshell. But no, not in this upside down clown world that we live in. Because instead, bond yields go up and mortgage rates go up. Why? Not because anything actually happened. Not because the Fed raised rates. No. It's because the Fed hinted that they might keep rates up higher for longer. Hinted. Just lingering a little higher, like that guy at a party who just won't leave even though the party's clearly over. So in return, Wall Street loses its mind faster than a toddler who's not potty trained. So then what do lenders do? The second there's a whisper of uncertainty, they start planning the apocalypse. Suddenly you're staring a 7% mortgage rate in the face like, hey, do I need to sell a kidney to buy a house? And all that is the economy in 2025. The stocks crash, the mortgage rates go through the roof, buyers freak out, sellers panic, and the media starts blasting headlines like, worst economy ever, everyone's gonna die, housing Armageddon. Look, I've been in this industry a long time. I bought my first house at 18, and since then, I have seen 5, count them, 5 of these so-called once-in-a-generation corrections. 2018, tariffs. It's over. 2020, the pandemic. We're all gonna die. 2022, no one's buying a house again. 2023, affordability crisis. It's unfixable. Completely broken. 2024, the election. Hide your kids. Hide your equity. And yet, every single time, the market has recovered. Sometimes it took 6 months to come back. Sometimes it took a year. Sometimes it took just a few days. Even after 2008, which was the biggest collapse of them all. Not only did real estate come back, it came roaring back. The only thing that didn't recover were the people who panicked, sold at the bottom, and then waited on the sidelines for the next crash. With all that said, let me ask you, when is the last time somebody made a good decision while they were panicking? The answer is never. That's when. You don't make critical life choices when your brain is doing cartwheels and your heart feels like a hummingbird. So here we are. The stock market's down, mortgage rates are up, logic is nowhere to be found. Insanity is holding on by a piece of dental floss swinging over a volcano. But here's the thing, that's where opportunity hides. In the noise, in the chaos, and in the fear. It's the people who can drown out the headlines, silence the noise, and keep a clear head and think long term. Those are the people who win every single time. So welcome to the economy in 2025, where the rules are made of jello, the game board is flipped upside down, and somehow, some way, real estate is still one of the safest and best investments you can make.